Welcome back to the Brent Bruce Daily. Today is April the 25th, 2023. It is now 4:42 p.m. Central Time. The mortgage-backed security and the bond market are closed for the day. We have had a good day here in front of the big report that we have coming out on Friday, which is the personal consumption expenditures report. It's been a long time since we've had one of our inflation readings come out. So this is going to be something we're going to be watching closely ahead of the meeting and announcement by the Federal Reserve, which is going to be coming out the following week. I believe it's on Wednesday, the 3rd of May. Now, from here going forward, from May on, we have every reason to believe that home loan interest rates are going to really start to come down. So we've had a rough road these last few months. Interest rates have been resilient to coming back down. They've been sticking higher than we'd like them to see, but again, it's going to be very difficult to get away from the reports that we see coming that are going to show anything but inflation coming down. So let's take a look and see where we are right now. We're up 27 basis points here on our mortgage-backed security, which is very good. More importantly, down 10 on the 10-year treasury. And I'm going to show you why that's important here in just a minute. Keeping in mind that usually in a standard market, a 30-year fixed mortgage would usually hover about 2% above the 10-year treasury, which would put us at 5.4. Now, if you watched this show yesterday, you know that without any points, we were sitting at 6.5. So that is more than 1 full% over where we would traditionally see the mortgage-backed security, or I should say the home loan interest rate on a 30-year fixed over the 10-year treasury. So we have a lot of room to come down. And in past reports, we've talked about why there's that additional gap over the 10-year treasury that isn't usually there, but that's also going to be something that will shrink very quickly. Okay, so I'll get into that again here in the coming days and talk about why there's some extra fluff in the pricing that could go away pretty quickly. And basically, what it's called is mortgage service release premiums. So let's take a look and see where we're at on the chart. Up, up, up. Been having good days. Have quietly broken above 1, 2, 3 ceilings, broke through the 200-day moving average, were pushed back down, closed the day just under the 200-day moving average. Once again, the 200-day moving average being that very difficult ceiling and just lid on us getting to where we need to get to. Now, the last few days, I have been talking about, matter of fact, I think I've probably said this 8 or 10 times actually in the past 6 months, that we've been fighting with the 200-day moving average for 2 years. It's actually more like 18 months. Just wanted to point that out. It's been about 18 months since we were above the 200-day moving average. So you can see it's been a very difficult customer because 18 months ago, interest rates were in the 2s and 3s. So that is really where the difference is that we need to get above and stay above the 200-day moving average to really begin to see things turning around. Now, we talked about that this is even better that the 10-year treasury is down 11. Why is that? Well, if you look at the 10-year treasury, now remember, we want this chart to show things going down, okay? Not going up. This is showing the interest rate or the yield on the 10-year treasury. We want to see this going down. And here's what's so good to see. This is now below the 200-day moving average, below the 25-day moving average, and below this Fibonacci level that we saw earlier today. The next stop that we might be seeing here is all the way down here. This is going to be a Fibonacci level as well at 3.27 before we drop all the way down here to about 3.22. So we now have a lot of room for the 10-year treasury to come down based on our technical indicators. And remember, we want the 10-year treasury to come down because that competes with home loan interest rates. So if the 10-year treasury comes down, it gives the mortgage-backed securities and home loan interest rates room to come down as well. So it is good when the 10-year treasury comes down. Now, being that we're in a position for the 10-year to come down and for the mortgage-backed security to get up and bust through that 200-day moving average, it makes it all that more important what we're going to get from our personal consumption expenditures reading here on Friday. So I'm going to open this up one more time, take a look and see where we're at on our actual home loan interest rates for the day. Let's run our scenario for the Brent Bruce Daily, our very well qualified 30-year fixed conventional home loan, 25% down, 800 FICO score, primary residence, just the best of the best of what we want to see. And we are currently sitting at 6.5% with a pretty healthy credit of 1,033. That one's coming from United. They're back to the top of the pack. If we open this up here, though, even more interesting and what we've really been watching, the 5.999 is only costing 0.619. So just over a half a point to get to that 5.999, which is good news because that's what we're really going to be watching before we click over to where we start talking about 5.999 without any points. So here's the parameters for the Brent Bruce Daily that we take a look at each day. Now, as I was just saying, we're watching the 5.999 because you can see how United Wholesale, who is really the premier mortgage wholesaler in the United States right now, how they are making their pricing attractive to hit that 5.999 number. They want to be able to offer, it's a key number because it's the first time that where they can touch the fives. That's marketing, right? That's marketing. They want to make sure that they're the best price on that 5%, what they call the handle, 5% handle on the interest rate, so that we can go out as mortgage brokers and say, hey, I can get you a five, and all you got to hear is five, and ding, 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 all of a sudden everyone's interested. A 5.999, and it's going to cost you a little bit over half a point. That sounds a lot better than, hey, I'm going to give you a 6.5%, but it's got no points. So pay attention to that. We have to make sure that we are always helping clients understand that there are options, especially when dealing with a mortgage broker, because we have all those interest rates available with multiple banks. So that's why it's such an advantage. Let me know your thoughts. Make sure that you like, subscribe, and share. Hit the notification bell up in the corner so that you get notified when these reports come out. And I will talk to you again tomorrow.